People don't want to hear about that.
People want Rod. All right, if you don't know Rod is the co-founder of GMEDD.com. Of course, doing some deep due diligence and research into GameStop well before the short squeeze, which happened a year ago today.
Tomorrow.
Yesterday?
Well, it started tomorrow.
It started?
Yeah.
I don't know. Well, we'll talk to Rod. Rod probably knows. All right.
Let's find out.
Without further ado, bring it on, Rod.
Boom.
Rod, how we doing? It's been too long.
It's been a minute, guys. How are you?
Good. And also, sorry for...
It's not quite the 1-year anniversary of the mania, if you will, but it was... what's today? The 12th? Yesterday was the 1-year anniversary, as Ryan Cohen noted, of the board settlement.
So that was kind of like the first domino, you could say. Maybe the first domino was...
I referred to it as at the time as a bloodless coup.
Got it. Well, so Rod, we'll get right into GameStop, and then of course, some other things as well. I should have mentioned while introducing you, Rod is also the managing director of Wook Capital. So we'll talk about Wook Capital in a sec as well.
The chat is all over you. Chat loves you, Rod. They love you. The people.
Let's go.
So, Rod, I'm just curious, like, as you look back now, it's been about a year, right? As you look back at like that whole saga, because even if you can say the saga hasn't ended yet, that period of time definitely is definitely ended, right? At least for now. So as you look back at it, like, how do you look back at that? How do you think about that whole period of time?
I remember you guys had me on about a year ago, and it felt like every time you had me on, there would just be Luke would be like, it's halted again. It was just insane. That January was clearly one of the most monumental moments in recent market history. I mean, obviously the whole GME, it's an operating business. We can talk about the operating business, but what happened with that mania in January, millions of people signing up for new Robinhood, other brokerage accounts because they wanted to be a part of this thing. That thing was something that I never envisioned happening. I don't think anyone who was a fundamentals oriented investor in GameStop or any of the other names that kind of became associated with the meme movement viewed as likely or as something that they would ever see happening. It really did just profoundly shift a lot of narratives. It's left some lingering, some people have some feelings about it. Obviously, you mentioned it's not over. Do they think there's some stuff going on behind the scenes still? We could talk about that angle of it. But no, a year later, I much prefer to talk about the fundamentals. And I do think that the business is rapidly transforming itself, unlike some of the other memes out there in the world.
Well, so Rob, let's take it back a sec to even before a year ago. I mean, a lot of this... everything that happened in GameStop was kind of, I'm not going to say foreseen, but some of the valuations and stuff were pointed out by guys like yourself, like Roaring Kitty. So I've got a few questions. First of all, when did you start GMEDD.com? I know it was kind of well before the short squeeze, but I forget exactly when that was.
Actually, it wasn't. So the GMEDD.com was a direct byproduct of a lot of retail investors, of which I am one, who felt like there was a deliberative, intentional muting of all things open discussion around GameStop. Like, as November and December 2020 rolled around, the amount of bot attacks on both Reddit, StockTwits, etc., other social media sites, my perception was from folks who were on the other side of the trade to try and shut down discourse. So the purpose of GMEDD.com was to have an open platform that no one could shut down to enable that discourse. We added an open source financial model, open source report. Like, everything was intentionally done such that here's the information that dozens of us have gathered over the years. And here's what we see, right? We laid out a bull case price target with a meme price target. It was $169.42. Yeah, that was a meme number, but the analysis and the research underpinning it was not a meme. And the market, by and large, over the last year has agreed with us. We put out the report kind of purposefully as a counter program to when Andrew left at Citron had said, it's going to go back to 20 fast, right? And obviously it didn't, and it never has, and it never will. But that was very purposefully done to try and counter what we perceived as just media, whether you want to call it mainstream media, whatever, kind of really keeping the real dialogue around GameStop's fundamental situation on mute. And we said, you can't press the mute button if we have our own website. Aha.
Oh yeah, I think it was your first original Stock Twits post about GameStop that I was thinking of. That was like
my first Stock Twits post about GameStop was some point in early 2018. So
yeah, that's what I remember. I remember you were doing DD. You were like doing some deep research on GameStop like well before all this unfolded. So I'm curious, what was like your original inclination that like, okay, I need to look into this. I need to look at the balance sheet. I need to look at what's going on.
Yeah. So I've shared the story a little bit. I had owned GameStop before 2017 when I was in my early teens. I've always been a big time nerd, always interested in financial markets. So when I was a teenager and my dad had a custodial account set up, I had actually bought GameStop before they bought Electronics Boutique in the early 2000s. So I was familiar with the business. Fast forward, like I sold when I had to go to college and needed money for tuition and room and board in like 2006 or so. But fast forward to 2017, and I viewed it as, it looks like this is an undervalued security. Obviously, it continued to decline in price over the course of 18, 19, and into 20. 19 is when Michael Burry had his famous Barron's interview that I think got a lot of folks interested in the ticker again when it was around $4. Roaring Kitty, of course, deep fucking value. However we want to talk about Keith, he put on his options trades largely, I think, in that summer of 2019. So yeah, I mean, it was just a buildup over time. There's a lot more to the story. I have a couple podcasts that I've recorded. Like I put one out in December of 2020. And interestingly, the local low, right? The price closed at 1272 that day we recorded it. And I remember the guys interviewing me were like, kind of Reddit guys, and they were like, aren't you nervous? And I'm like, you guys don't realize I've been in this for years and I've done my DD. I'm not worried about it.
Yeah, you're less nervous when you have that information at your back, and yeah, you can call Keith whatever you want to, just don't call him a cat.
He's not a cat.
Exactly. He's definitely not a cat.
He's not a cat.
He does like the stock.
But Rod, so I mean, this he does like the stock. This last year has been undoubtedly crazy for anyone in retail investing. I mean, did we ever get to a point where you kind of thought to yourself, like, all right, this is getting like a little overdone, or maybe GameStop is getting a little overvalued here? I mean, do you think kind of the storyline got away from the original storyline that you and Keith had both originally identified, just that this stock is tremendously undervalued?
Yeah, it did, right? Like that week in January a year ago, that last week, it morphed into a mania, right? When Chamath was tweeting about buying call options on GameStop, when then Elon, of course, famously tweeted GameStonk. On the chart, I think it was, if you look at the green candle before the mega jump, it was that afternoon after the close that Elon tweeted GameStop, and that literally added over $10 billion in market cap at the snap of or at the click of a tweet. So during that week, I had a podcast recorded with Bloomberg, the Odd Lots team, the morning of Thursday, January 28th. While it hit its all-time high intraday, we recorded the podcast, myself, Joe Weisenthal, Tracy Alloway. So, listen to that just to hear the emotion in my voice, watching the ticker while I'm trying to have a cogent conversation with these two really sharp journalists. While the stock was literally on a moon mission, and it did get ahead of itself, right? You had this the SEC report that came out a few months back. I think you can boil it down to, it wasn't, a gamma squeeze. It wasn't a short squeeze. It was a really insane shift in the sentiment around the stock, largely on the retail side, that saw massive flood of buying, and it morphed. It eventually did become a mania, but it was fundamentally a shift in sentiment that drove things. And it was the fastest shift in sentiment that we've ever seen before. And I think that our research helped enable that, because they could see these are people that have worked on this for years, who've done their work, who are saying, look, the sell side is saying one thing. There's really only one sell side analyst, Stephanie Witsink at Jefferies, who's said anything like, yeah, I think she has a $175 price target right now on it, if I'm remembering correctly. And at the time she had said, there is a reason why the stock is undervalued back when it was at lower levels. But by and large, everyone, even today, it's like you got the Anthony Chicumbas of the world at Luke who don't even cover the name anymore, says it's nonsensical. And it's like, well, man, you're just saying that because you refuse to actually contemplate that what they're doing is going to lead to a successful transformation. You're just assuming that what's on the income statement today is what's always going to be there. And if you're looking backwards, that's just not how you analyze securities. You have to look forward, and you have to incorporate all known information when you're making those assessments. And I just didn't think people were doing that in media by and large. So, I'm very proud of what I think we've done and what I hope that it's going to lead to, and has led to.
Yeah, well, it's been a crazy story, and you've kind of been at the center of a lot of it. We've got some good questions rolling in the chat. Spencer, do you have something?
I wanted to ask Rod about the other day, right? About the report from the journal about detailing with some specificity, right? GameStop's NFT operations and crypto ambitions, right? And obviously the idea of that has been out there. So I would love your take on the reaction, on the market's reaction to that article, because it seemed like I happened to just be on Wall Street Bets when the article dropped, and people were like, "Oh, this isn't even new news. We already knew about this," But then there the stock was going. It was going as if it was new news. So like, I just what is your take on that?
Yeah, totally. Some of it was marginally new information, but I totally agree.
Yeah.
By and large, it's been known. Like the NFT.GameStop.com has been out since I think it was May of 2021. So I mean, many months they've made it publicly known that they're seeking creators, they're seeking players and gamers to be a part of this. Maybe the quantity, like the 20 plus full-time employees dedicated to the project, wasn't known. Right, that they Barron's reporter followed up that they had explored an acquisition of Loopring, a level 2 Ethereum solution that we believe, and GME has for months reported on, that we believe they're going to be incorporating into whatever this marketplace product is that they're building to enable, gasless. Like if I look at Gwei right now on Ethereum, it's like 300 plus. It's been insane to start off the year. But the gas fees to transact on the Ethereum blockchain are very high. And GameStop's been working on a solution with Loopring, and there's others, I'm sure, that was in the reporting, to enable low or no gas activity in blockchain. Okay. And again, that's all known, though. I mean, it had been reported. So to me, the price reaction was really overblown. It was very strange. I know there's all these kind of conspiracy-esque theories out there I'm not really going to touch on. But it still does trade like a meme. It still does trade heavily correlated with AMC and with other companies that don't actually have any sort of fundamental transformation going on or any connection to the underlying fair market value, in my opinion. So it's still trading like a meme, even though I don't think it is actually a meme.
Got it. Rod, another company that we've discussed with you on this stream before has been Playboy. We actually had Playboy's CEO, Ben Cohn, on the show about a month ago. Spencer, I believe.
I think it was about a month or so ago. Yeah.
Yeah. Early
somewhere.
December.
I don't know. Time is a circle. But
do you have any new DD insights on Playboy or any other stocks out there that you're kind of researching, thinking, hey, this looks kind of undervalued, or anything along those lines?
Yeah, Playboy is another one that, a lot like GameStop, if you look at its financial statements, if you look at the financials in isolation, you'd be like, why do you see an opportunity here? You guys had Ben on. Ben was at an ICR conference sharing kind of an update yesterday. I think you can hear that recording at the Playboy Investors page. Lance, the CFO, is going to be on Friday. But I was on Benzinga, I remember, earlier this year talking about Playboy. And I brought it up, I think it was in March. It's had an interesting run over the course of last year. Kind of had a crazy moon mission in April when they announced they were going to be exploring NFTs. And they've done several different NFT launches over the course of 2021. Stock went up to 60, back down to 20-ish, up then to 40, back down to low mid 20s right now. But when you actually look at, okay, I don't care about just looking at a price chart, right? So when you look at that price chart, you're like, what? There's a lot going on, but there's actually been a lot fundamentally that's going on in this chart, right? So they were a D-SPAC. They didn't necessarily have the dilutive warrants associated with their SPAC merger when they came public. So from a dilution perspective, you don't have that overhang of a ton of warrants outstanding. They, after they saw the price appreciate significantly, they were able to opportunistically raise some capital in the 40s. They bought Honey Birdette, which is a luxury lingerie and lifestyle brand based out of Australia. A lot of creators like to wear Honey Birdette attire, but they acquired a design team that Playboy's now going to leverage that design team to create Playboy branded swimwear and nightwear. They, in October, you see the jump in to the left of November on the chart when it jumped up from those low 20 levels. They acquired a company called Dream, which they are launching a platform called Centerfold. It's in a soft launch right now if you go to centerfold.com. And Ben is trying to position it, Ben Cohen, the CEO, is trying to position it as kind of in between Instagram and OnlyFans. It's not going to have the hardcore pornography that is on OnlyFans. It's going to be more tasteful than that, but it's going to not have the creator censorship like Instagram, where women and men have to worry about their accounts getting banned and all their followers deleted because they posted a nipple or whatever. So Ben's making this creator platform. This is the digital foray for Playboy. It's kind of going to be this top of funnel flywheel where creators are creating whatever it is that they want, within the terms that Playboy worked with them to create. They're going to be able to post their content, have subscriptions similar to OnlyFans in that regard, a very high margin platform business. But for Playboy, the kind of secret sauce is you already have, a design team in Honey Birdette. You have a distribution network in terms of Playboy's DCs. You have an e-commerce platform. So if I'm a creator and I want to build my own brand, right, they brought Cardi B on as creative director. And while we haven't heard much from her publicly, presumably Cardi's trying to launch her own, cosmetics line, right? Like Rihanna has with Fenty. So Rihanna, whether she collaborates with Playboy's design team now to create her own swimwear line. I think it's interesting when you look at what they've accumulated and it's not yet on the income statement. So it's like you're potentially very early to the party when it comes to Playboy. And then when you look at the chart recently, look, all of these kind of high growth story stocks have been taking it on the chin because of the interest rate concerns and inflation concerns at the Fed. So you've seen this factor shift, right, from growth toward value and quality. And for now, their financial statements don't reflect value and quality, but it's among my largest positions. I've been in the name, I've been accumulating. I look forward to seeing the story play out over the next few years. I think it's going to be a $10 billion plus enterprise in a couple of years.
Yeah, one thing I've learned about news flow is it's quiet until it's not, and you don't hear anything until 5 months go by. Oh, wait, here we have an update for you, and then whoa, I forgot all about this from 5 months ago. So, yeah, it's quiet until it's not. I don't want to ignore the chat. The chat's flying with questions. There's this is one from Mickey I thought was interesting. Question for Rod. Speaking of the theories, what's going on? I think we're back to GameStop here. What's going on with the price action on earnings? Seems to be the same cycle every time.
Man, GameStop earnings every freaking time. It just feels like it falls off a cliff. They report earnings and it tanks. It's felt that way for years. I don't know that there's much more to it than, of late at least, I think maybe investors, some more of these maybe less experienced retail investors are buying call options ahead of earnings with an anticipation of one thing, and then you maybe get that kind of slippage where, now I'm selling, and it kind of leads to cascading selling because the results, the company's been very mum, right? Like the company has issued very terse statements at the last few earnings calls. They're like, we're not going to telegraph what we're doing. But I think if you've listened closely and paid close attention, you understand it's broadening our SKU selection, broadening our product categories that we participate in, growing our private label business on PC related hardware, accessories, etc. In addition to the digital initiatives, I believe they are working on making this your primary destination. If you're thinking of anything gaming or pop culture or collectibles related, you're going to GameStop first. And in the interim, they're going to forsake margin. They're going to forsake percent margin at least. They're going to grow margin dollars though by growing the top line. But I think you're going to see margin percent continue to compress a little bit. partially a function of mix, right? Pre-owned gaming has been their legacy bread and butter business for decades. We all know that is continuing to decline, potentially in a terminal decline. So I don't know what to say about earnings. It's like every time it's like a punch in the face.
Oh wait, you know what I haven't done is I have not looked at the calendar. I don't even know when they report. I think they're like later. I think they're usually off cycle. I feel like, but I could be wrong. It might not even be confirmed yet.
Yeah, they're going to report some point in March. They
Okay.
should be reporting. They've historically reported holiday sales results right around now. So whether they're going to continue to do that, or with this new team that's kind of very cagey about information disclosure, opt not to, I don't know the answer to that. But they do have a fiscal year like most specialty retailers, where they end the year Jan 31, and they'll report in March for fourth quarter.
Got it. All right. Do we have any like actual questions that like Rod can answer that are not about like other people, or like I don't want to have him.
I had a joke I was gonna make. I mean, Rod mentioned Playboy launching Centerfold. I was just gonna make a joke. I was gonna say I think Playboy launched Centerfold a while ago, but different product.
That's a Mitch.
Not that I would.
No, I read Playboy for the articles. Okay.
That people used to say that. Like I think back in the day there were some like years where Playboy actually had some like good editorial content.
And I think
again,
that they're going to recreate that. And I think that the other part is people think of Playboy and have a very maybe in the looking back, it's like, oh, what is Playboy? It's a magazine. Well, no, they haven't published a magazine since before COVID, so it's no longer a media and entertainment company.
They haven't published. Yeah, Playboy hasn't.
No, they.
I did not know that.
They were losing money on the magazine.
Yeah, I think that was a couple. Yeah, I think that was like 2019.
Well, Rod, my last question from you was just going to be, I know we mentioned NFTs talking about Playboy, but I just wanted to kind of get your gauge on NFTs and what's going on with NFTs in general right now. Is your profile picture on Twitter an NFT?
Yeah, that is a Rabbitar. That's one of the Playboy minted 11,953 of them in October in honor of their 1953 year of founding. So the Rabbitars are there. They've talked about them as a potential form of Playboy Club membership. So Rabbitars, so far, they've done a party in New York City that Rabbitars got access to, a party in Miami at Art Basel. So they did NFT NYC, Art Basel in Miami, these two live party events that I unfortunately didn't have the opportunity to attend. But speaking of folks who went, they were a blast. There's access to, they're going to be doing, I think, digital parties. Like they're going to have musicians, comedians hosting parties at a digital Playboy mansion, so to speak. So it's a mix of real world and digital world benefits, right? If you go and right click save my profile pic, you're not going to get access to those benefits. Obviously, people joke around with NFTs like that, but it is in fact a form of, I own this token that's providing me these incremental real world and digital world benefits. Yeah.
Got it. And then just on the NFT space in general, like, are you bullish the NFT space? Do you think? I'm always just curious.
I think most NFTs go to zero. I think most NFTs are worthless. I think most NFTs are speculative tokens. That said, there are many NFTs that will survive, a small bucket of them that have real utility, whether it's in the form of a community that's been built, right? BAYC, of course, CryptoPunks. Those kind of as OG tokens, I think have built some impressive communities that I think will survive an NFT winter. But there's so many where it's a scam. It's a rug. We're doing this just to try and monetize. If I'm a celebrity, I'm just trying to mint as many NFTs as I can and take advantage of it while the iron's hot. And there's nothing that stands behind it. But the reason why I'm very bullish on Playboys in particular is they've articulated that Web3 is how they view the company operating into the future. It's a creator-oriented economy that we're shifting towards, that crypto and blockchain do enable in ways that weren't possible maybe in this kind of legacy world. Ben Cohen at Playboy's been very bullish on it for most of 21. I think the team has done a lot behind the scenes. I know they've teed up that there's a big announcement coming on Friday pertaining to the Rabbitars. So I look forward to hearing about that.
Beautiful. Yeah, I honestly I agree with a lot of your sentiment there.
I agree with all of it.
We talked we talked to a guy who's in the minor league baseball, and he has his own NFT project, and part of it was, if you buy one of these, you can come get special access to one of these minor league games or whatever. So anything like that can get you some real world value, access to a community like you mentioned, I think is cool. Otherwise, it's just what's the utility here?
I agree with all that. I'm cautiously optimistic on Web3. I'm very excited for it, but
Oh, Web3 will have like big use case. I think it's just
But
too
it's so
early.
early.
Yeah,
That's what
it's
I'm
like, it's
saying.
like we didn't in 2000 people didn't
Right.
know how the internet was going to be used to reshape business and the economy.
Right.
So in the same way, we really don't know with Web3 now, but we'll have a better idea in a few
Exactly.
years. But Rod, it was a pleasure to have you back on. Hopefully we can get you on again soon. You know, anytime there's updates either in the GameStop story, in Playboy, anything else that you're researching or finding, info about, just reach out to us and we'd love to get you back on.
Yeah, you guys will see me in a documentary that's coming out shortly on GameStop in the next few weeks. So keep your eyes peeled.
Where will I see that? Do you know? Netflix?
Are you allowed to say?
I can't.
Are you
I
at liberty
can't
to
say much. I can say it'll be on a big screen somewhere before it's on a small screen. That's all I'm going to say.
Okay.
Ooh, so AMC, GameStop, collab.
Collab? I don't know.
We'll see.
He did say
Also,
that.
Rod, I was gonna mention I gotta go back and I think I listened to that Odd Lots episode at the time, but maybe it'd be fun to do that like a year later. Go back and listen to it. And I love Joe and Tracy. We were actually supposed to have them on this show, but I think Tracy was like in Hong Kong and had trouble with her internet or something. So I don't know.
By the way,
It fell through.
Rod made the best of Benzinga YouTube 2021 video. I'm going to put the link in the chat if you missed it. Rod made a cameo because his interview was one of the best of 2021 on our channel. So Rod Alzmann, a pleasure, man. Have a great rest of your day. Great rest of your week. Thanks for coming on.
Thanks for having me on, guys. Look to be back on soon.
All right.